with that, I'm looking at this panel, and I look at the previous panel, and I look at a beautiful amalgamation of different colors, different cultures, different people, but all of us are coming here to the UAE to exchange ideas. And all of this wouldn't have been possible without the fantastic organization of the DIFC and Trescon. And for them, really, a big round of applause. All righty. I'm absolutely excited because on the panel over here we have this beautiful range of people, and you can see it in the way that people are dressing, right? We have the people in t-shirts and we have the people in suits, and with that we have regulators sitting here, we have startup founders, and I'd like to start this off by a quick round of introductions, starting with Alex.
Thank you. My name is Alex. I'm CEO founder of Upbit APAC. Upbit is the operating regulated digital exchange in Singapore, Korea, Thailand, and Indonesia. And also, we operate the largest travel solution for digital service, handling about like $4 billion a month. So we are quite deep-rooted in regulated digital asset business, both by operating a regulated spot trading platform and also a travel solution.
Wonderful. All right. Moving on to Dominic.
Hello, everyone. I'm Dominic. I do want to say I do wear suits from time to time. I thought this was a fintech conference, so I kind of feel underdressed.
You're the startup founder here. That's how we know you're a startup billionaire.
Next year, I'll come in a suit. So I'm Dominic. I'm one of the founders of IOTA, and our focus at IOTA has always been sort of like to move forward the real-world adoption of blockchain, right? Not just the crypto-native use cases, which really revolve around trading of assets. We really wanted to work with enterprises and with governments to showcase the potential of blockchain, right, across all the different industries, whether it's supply chain, manufacturing, trade logistics, or finance, and then really make sure that we move forward from proof of concept to real implementation, real products. Because ultimately, blockchain only makes sense if it really has impact in the real world.
Right.
And so we founded IOTA as a layer one blockchain. We today have 3 independent entities, one in Germany, non-profit foundation, one in Switzerland, and one here in Abu Dhabi. And with that, we're really moving forward the space and sort of merging real-world adoption, regulatory-friendly environment, and sort of like this crypto-native space.
Nice. Happy to have you here. Gottfried.
Hi, my name is Gottfried Haber. I'm Vice Governor of the Austrian Central Bank, and among other responsibilities, responsible also for CBDC issues and for banking supervision, financial market supervision, and regulation. So I'm the guy trying that not everything is regulated to death. There are some reasons to regulate issues, and I think the 3 most important ones are maintaining financial market stability, preventing criminal activity, and maintaining a level playing field. But apart from that, DeFi and fintech is really in the business of doing something new. So we should really try to make sure that that can happen within a good framework, of course.
Nice. Thank you for joining us. And Gene, last but definitely not least.
Thank you. Gene Hoffman, CEO of Chia Network. We are the company that launched and otherwise generally supports the Layer 1 Chia blockchain. Chia is the brainchild of Bram Cohen, who is the inventor of BitTorrent, of which Bitcoin is named an homage. And we suspect that Satoshi were friends of ours as I was a cypherpunk back in the early 90s and helped end export controls on cryptography from the United States. Chia is the most decentralized Layer 1 ever. Only recently has Bitcoin come up to the node count that we currently have, as we've come down from about 500,000. And that's been due to inscriptions and ordinals, which is a whole hilarious other story. The Chia blockchain has a very high Nakamoto coefficient. This means it has lots of different signers. Once in a while, we have actually farmers in McMurdo Station, Antarctica, to give you a sense of how truly decentralized it is. But more importantly, we are one of the primary DeFi chains. We have a style of DeFi and a better set of technologies that really only Bitcoin can also get to, but requires considerable upgrades to Bitcoin script, potentially them even adopting our programming language. But for the folks in this room, we were chosen by the World Bank to basically become the Edgar infrastructure of the voluntary carbon offset market. So one of the few in production, other people's money applications. It's a partnership called the CAD Trust, the government of Singapore, IOTA, the World Bank, and ourselves. And about 80% of all voluntary carbon offsets are now tracked and recorded and retired in the CAD trust on the Chia blockchain. We've also partnered with IFC to then tokenize that carbon, and the first granted trials, but real money, real carbon, were sold to Sumitomo Corporation of America and Meilon.
Wonderful. And last but definitely not least, my name is Saqr Ereiqat. I'm a partner at the TradeDog Group. At the TradeDog Group, we're building the Goldman Sachs of crypto, and I'm very happy to be joined by an esteemed panel over here. I'm going to enjoy this the most because really what you're seeing over here, we have layer ones, we have startups, we have regulators, and we have one of the largest, if not the largest, regulated exchange in the world. A super exciting panel, and I really want to start off with a very basic question. What is DeFi?
Well, if I can talk about DeFi, it's an interesting question, and well, when you talk about Apple, we have like usually agree upon what we're talking about, but when we talk about DeFi, we have a lot of different definition on DeFi, what it means.
Right.
Some say it's a lack of middleman, some say if any service, financial service using blockchain element is a DeFi. Some says it should be peer-to-peer financial services. So we have a wide range of definition. Personally, I believe like any financial service using blockchain technology can be called as DeFi. So in such a sense, even though a bank is providing, let's say, tokenized deposit service to its customer, it can be deemed as DeFi in my opinion.
Very interesting. Now, today, the volume of crypto on a day-to-day basis is $3 trillion. How big do we believe DeFi will be in the future or already is? Gentlemen.
Well, I mean, look, fundamentally, DeFi is likely to disrupt equities exchanges, the debt markets. It is a superior way to do business. And unfortunately, most people kind of have in mind the Ethereum view of how DeFi works. Ethereum is very much not peer-to-peer. It is peer to a centralized smart contract to peer. And that adds all sorts of risks, including, did your developer actually let go of control of the contract? Have the North Koreans figured out how to get control of the contract? In Bitcoin and in Chia, you actually are doing trustless, escrowless trading. So you're out there saying, hey, I'm willing to acquire that asset by spending this coin, and I communicate that as a bid and ask, email, carrier pigeon, QR code. The other side can look at that and inspect the chain and say, yes, okay, that coin is there. I'm willing to take this deal. I'm willing to settle it, and by being the taker, I will just sign in the assets needed and settle it on the chain. So all of a sudden, you have a kind of global trustless trading capability that really hasn't been there. And in fact, one of the things I kind of add is that one of the problems in DeFi is what we jokingly call DINO, which is decentralized in name only. And that, I think, is one of the most important aspects that, where I would agree in a sense that tokenized deposits or stablecoins are DeFi, you're still now trusting someone.
Right.
And so that in some ways isn't that.
And numbers-wise, where do we lie with the entire DeFi industry? How large can this be in the future? How large is this today?
Today, it's a couple $2 billion maximum.
Right.
But, I frankly think it could be in the trillions. When you ultimately think about how, I'll back up. We accept some hilarious things when we stop and think about them. U.S. equities trade from 9:30 a.m. to 4 p.m. on 5 days. Not every time on 5 days. We're going to have a 24/7, 365 market. And, we also make assumptions that, well, either regional or national liquidity pools are acceptable. Why exactly, as an equity issuer or a debt issuer, do you only want to address, like, the U.S. and the U.K. and not the Middle East and Asia with the exact same offering? Right. So I think that that's going to drive the $1 trillion number that we're talking about. But to date, again, some of the shortcomings of Ethereum have held the real-world asset tokenization that would drive that off.
Yeah, Your Excellency, Gottfried, there's this beautiful point mentioned that it's now moving from 9:30 to 4:30 to 365, 7 days a week, and really 24 hours. As a regulator, I can imagine that's a unique challenge. And in Austria, you have one of the more successful startups in this space, Bitpanda, one of the regulated exchanges, no fines, no negative press that we've ever heard about them. I'd love to hear from your point of view as a regulator, what are the challenges that you've seen and you foresee?
Yeah, perhaps in Austria we have Bitpanda, but apart from that, I think it's more interesting to have the European perspective, and as a deputy alternate member in the governing council of the ECB and as a member of the SSM supervisory board within the European supervisory mechanism, I think what we see is that I'm not sure if zero trust really works, to be honest, because I think you have to trust somebody. And perhaps it's some kind of terminology, such as the discussion on what is DeFi. What we saw for Bitpanda is that trust plays a role. And I think we should not confuse centralized or decentralized with fragmented or chaotic and small. Yeah?
Right.
So I think if you get the critical mass and if you gain some trust as a major platform, providing the security and safety which people are fond of having, yeah, to be honest, then I think that is one of the ways forward we will see in DeFi. So I think we're still in the stage where everything has to be tried and there is no market consensus. Not everything has to be regulated to death. There is some kind of intrinsic regulation by markets as well. And
Right.
what I see is that platforms as Bitpanda and others, they gain trust. And even in a trustless environment, I understand what you're saying, there has to be some trust.
I like that, and you know, in many ways, this is what a government is looking for, not to be essentially replaced by blockchain, but essentially be enabled with trust by blockchain, and how can they actually provide that trust? Dominic, you've been on this route since 2011, built one of the more successful foundations. You've actually worked a lot with institutions. Tell us a little bit more about this intersection between, you know, our open cypherpunk kind of driven mentality and this institution, and where does this come together, and what have you as IOTA done in this space?
Yeah, you know, like one of the main reasons why I actually joined this space back in 2011 is because I couldn't open a PayPal account, right? Because I was too young to open a PayPal account, and so I couldn't operate my business and pay my developers, and so that's why I learned about Bitcoin. And I just thought, like, this is absolutely amazing, right? That you can just transfer money around peer-to-peer. You're not being told what you can and cannot do, right? And so that really empowered me as a person to create a startup and to be on this trajectory to find my purpose and fulfill it, right? And so this is really one of the main reasons why I'm part of this space, to make sure that it's not just about a handful of people benefiting from this technology, but everybody benefiting from it, right? And so I think this is why there's so much power behind this technology, but we need to make the right choices to make sure that the technology itself actually gets adopted in the real world. And so this is exactly where I agree with you, right? So we need to make sure that there's not regulations in place that inhibit people from actually using this technology, because there's a lot of wrong choices that we can make right now in terms of regulations and over-regulating the space, so that you really inhibit new applications and new builders to adapt this technology in new ways that we wouldn't have thought of, right? And just to your question before is like the impact of DeFi in the real world. We're already seeing that where, like, for example, the International Bank of Settlement, right? They've already started adopting AMMs, right? Writing white papers about it. So the technology behind DeFi is already starting to be used within the real world. We're starting to tokenize billions of assets and bring them on-chain. So I think that's really a very exciting trajectory. I think for us, the main learning over the years was that you need to have a strong regulatory environment to innovate and to operate, because that can really hold you back, right? In 2017, all of us were shooting in a million different directions, right? We were talking about decentralizing insurance, decentralizing this, innovating here, innovating there. And ultimately, all of us realized the main thing that is holding us back is the legal environment, the regulations, because we need to have clear regulations for institutions to actually trust the technology, to actually use crypto assets, to tokenize assets on there. And so this is why this environment is so key. And that's actually one of the main reasons why we came to Abu Dhabi, right, as a European entity, because here in the UAE, the regulators are really forward-thinking, right? And they really want to embrace the space and want to speak with the innovators, want to speak with the ecosystem so they can learn and then draft the right regulation. So this is really the most important part, where the regulators speak with the ecosystem, right? Because we were talking about this before as well. Right. This space moves so fast for us as well that it's impossible for us to catch up. So how should a regulator who has like a million different tasks, how should they actually be up to date with what is happening in this space? So this is why this collaboration between the ecosystem and the regulators is really key.
And it's actively working, right? This overnight success that the UAE had has been building since 2014, and we have regulators that are actually bringing us to the table, sitting down with us, and interacting with us and asking us what we think. Alex, you mentioned that you play that role a lot with the UK, with other countries in the world, and it's a very unpopular way to go as the founder and CEO of an exchange. I'm wondering what animated you to go this direction?
So I spent, these days, more than half of my time in the public sector consultation, including FedEp, ISCO, and many national regulators. And that was triggered by, actually, FedEp recommendation 16, travel rule. So travel rule applies in traditional FI. Now it's being applied to digital asset as well. So as an exchange, we have a deposit and withdraw. And we want to make sure that there's no, bad people sending asset and receiving asset. And to do that, we developed a solution called the Verify Fast. So now, since 2 years ago, in Upbit, we verify who is the originator and we verify who is the beneficiary. So we have a full transparency in our digital flow. And that is a FedEp recommendation. And now many regulators around the world is adopting the travel rule. But since they are doing it for the first time, there's a lack of understanding in the industry, private sector, and they got some differences in local regulations. So I am working very hard to have a globally harmonized travel rule regulation so that industry can have a better transparency to build a sustainable ecosystem. So back to your question of how big can be DeFi, well, let me ask you back, how big is the internet finance? It's very large, isn't it? And we have to think of the future. Soon we will need to be able to connect things, non-human beings, into financial ecosystem.
Right.
We're going to give a bank account to machines and things. We're going to have machine-readable banking contract.
Right.
So the size of the DeFi can be very large. It can be bigger than the finance service we see as of today.
I like that you point towards that because that's really the answer that I was looking for. I think blockchain is a similar base technology like we think of the internet, and the internet connected us to information, whereas blockchain, distributed ledger, call it what you may, will connect us to transactions. And I don't think in human history we've ever been connected to our transactions in a way that blockchain offers to do that. But I want to drill down on regulators, right? Because in our audience we probably have regulators out there, people that are actively working with regulators, maybe part of consultation papers. And this is a question to the wider group. What's 2-3 things you'd call out in a good regulator, right? What is it that you're looking for? And I'm going to start with Gene over there.
Well, so I think one of the problems in this space is that quite a few folks entered the space and attempted to ignore the hard 100 to 200-year history of understanding how humans are horrible to each other.
Right.
So there's a massive swath of existing regulation around things like securities, that make a ton of sense. And this is where I really agree with my colleague. What the blockchain and DeFi can do is make sure that you're acquiring Apple stock. What it can't do is tell you whether or not Apple stock is a good investment and do you trust the CEO, right? So there is a class of regulation that is just regulating the human animal. But there's also a class of things that are somewhat unprecedented. So on the far extreme of this, there is in economic science and mathematical science the ability for individuals to now write full put-call option spreads in a way where the counterparty is the blockchain. So in the past, that was a problematic thing because you had to know that your counterparty was good for it, and we all knew how that blew up. But now when you have a truly mathematical, truly trustworthy system where you can't do that, is that a regulated options exchange? Or is that a whole new thing that doesn't have custody, control, counterparty risk to it?
But Gene, I want to bring you back to the question. What would you call out being a good regulator? What are their activities?
So a good regulator is a couple things. It is really looking through the existing corpus of law and regulation and saying, okay, what are the things that are universal and what are the things that we have evolved because of the technology? So a great example of this, the word exchange is a verb. And a lot of regulators want to make an exchange be a noun.
Right.
And that is understandable because in the past it was a noun. Wall Street was a physical street where you came and met and yelled at each other to trade. That's not what a good DeFi system is. It looks like an exchange, smells like an exchange, does things exchanges do, has none of the risks of the exchange. The exchange cannot front run you, the exchange cannot steal your stuff, the exchange is not involved with settlement. You know, all the things that drove that regulatory impulse just aren't actually there. And so I hear this one bad thing often, you know, we're gonna regulate like.
Okay.
And the problem is that the technology underneath isn't like. And so I think that's the challenge that I would say, you know, we want to find better attempts to explain this to regulators, to get regulators comfortable that it really is actually secure, that we're talking about math, we're not talking about, you know, politics, you know, it's not Sam Bankman-Fried saying that his system works and he didn't even build it. It is, no, it is actually provable at a mathematical level. So it's being open to understanding that things that look like some of those traditional systems aren't those traditional systems at all.
Right. I like that. Tapping into existing laws and regulations before thinking about new one. Your Excellency, Gottfried, you actually are a regulator. So what would you call out as things that worked well for you?
Well, I think it's important to regulators to get one step back and to acknowledge that it's important that regulation should be principles-based. Because regulators always try to be ahead of the curve. But that implies that we have to know what the future brings. And that's totally wrong if we talk about innovation, DeFi, and fintech, yeah?
Right.
So we have to be, well, very aware of the fact that if that's not possible, principles are the main focus we have to see. And as I said, I think it's important. Why should we regulate? It's not for regulation itself. It's not a self-purpose. It's because we want to provide financial market stability. So it's important that even activity that's good on the micro level might be affecting financial market stability by financial market intermediation or other means. So that's the most important thing. Then criminal activity should be prohibited, of course, and it is prohibited, so I wouldn't see any additional needs for regulation in that field. But coming to the third field, to the third aspect, it's also a level playing field. And of course, we're talking about AML, CFT, and other issues, and it should be made sure that also decentralized transactions have the same high quality and the same standards, and there is a level playing field for the different financial market agents. Yeah.
Right.
So having said that, if we know it's principles based, then we should, in the next step, make sure, and that, as a regulator, I may be so open to say that bad regulation is to prohibit everything, and then just to open a sandbox for some selected activity. So I think if we are aware of the fact that we can't anticipate future developments, we should make sure that there are strong cornerstones, strong pillars of regulation, that there is a well-defined field of activity that is possible and that is eligible for doing business, for providing transactions, and then we should let market forces also develop some competition, and market forces also decide on what might be the next issues. And we are in a world where we have sometimes zero risk tolerance, and I'm not sure if zero risk tolerance is compatible and consistent with innovation. So we should also be aware that sometimes regulation cannot prevent everything, and there might be accidents in the development of DeFi instruments.
And you have to have that mindset to fail forward. You know, you had me chuckle when you said sandboxes, because that at some point in the fintech space and then crypto space was, it seems, the answer of every regulator to just open a sandbox and invite everyone in there. Dominic, I'm sure you've been part of a few of them, but you know, also in the prep discussion, you shared some really interesting points. What do you see what is the difference between a successful or unsuccessful? What are good regulators that you've seen out there?
I mean, I think for us the key is that the regulator is approachable,
right?
You know, because oftentimes, like, we don't expect them to be the domain experts. We don't expect them to really know how an AMM works, how UniV2 versus UniV3 works, right? Or the intrinsic technical details of the protocol. But I do think we do expect them to actually reach out and ask questions. Because I think that's really key to blockchain and to this new technology, that we have sort of this co-creation mindset between the innovators, which is us, between the adopters, which is big companies and governments, and between the regulators, because this is such a nascent technology that we need to come together and actually have a sort of forum a way to engage with each other, to share learnings, understand what the requirements of a regulator are, and then actually work together on drafting the right regulation. Because I think the worst thing that can happen is that regulation just gets pushed onto the industry, and everybody in the industry just suddenly starts to realize, hey, like, what is happening? This doesn't make any sense, because now this and that use case happens. This is exactly what happened with Mika, for example, because suddenly the barriers were so low that micropayments weren't possible anymore, right? And so now the industry had to come together to figure out which lobbying agency to work on that could actually help us engage with the regulator. And I think that's actually a very bad approach, because now we have to make this last-ditch effort to make sure that the large area of use cases isn't going to be prohibited with this new regulation. And so that's why I think it's really key that we, engage with each other and discuss the requirements of the regulators. They're one of the most important stakeholders in what we are building, right? And I don't think the mindset of us or of others is to be anti-regulation. We want to have regulation, right? We've been talking about it since 2017, 2016, that we want to have smart regulation, but it hasn't come forth yet, right? And so this is why, we need to sit down and discuss what smart regulation can really look like.
Right. And in many ways, it's why the UAE works, right? When we look at, and I want to call them out, VARA, ADGM, RACDAO, the DIFC's regulator, they are actively engaging the community in conversation, right? And this is actively working, right? They invite us when they issue a guidance paper and they take points of view. And yes, of course, is the result always perfect? Maybe not, but at least we're part of the conversation and we know where to go. Alex, I can see you nodding along, and you've spent a lot of time with regulators. Anything to add from your end?
I believe private sector engagement is very important. Like, if you have to catch bad cowboys, you cannot catch them if you have to run.
Right.
So you need to have a better police car, perhaps.
Right.
And you need to, like, also able to see what is fundamental difference. Imagine there is a village. There is only banana and orange.
Okay.
Suddenly,
I like bananas.
Okay. Suddenly you have an apple.
Okay.
Then there's a debate. Is it banana or orange? If there's apple, you should be able to see apple as apple.
Right.
Otherwise, you cannot regulate. So
Right.
we need to split what
I like that.
you want to regulate and how we're going to regulate. Usually, in case of financial services, I believe what we need to regulate is quite common, like AML safety, sanction, risk mitigations, or maybe investor protection. There are many global standards. We can apply that, that's fine. But how to regulate needs to understand inherent technology basis. Otherwise, we cannot use better technology to mitigate emerging risk. So in such sense, I believe private sector engagement, learning what's going on is very important.
And I agree with that 100%. I think education is such an important part. Now, I want to switch gears for a second, right? We spoke about regulation, and regulation is obviously, a difficult topic to talk about and to grasp for the wider audience. Having said that, I think DeFi is this this wonderland of opportunities for all I can tell. And I'd love for each one of the gentlemen to paint a picture. What are good use cases that you see? What are opportunities that maybe in a utopian future we could arrive at? Who would like to start?
I mean, I can probably start. I would say the most imminent future that all of us are really going for is tokenization of real-world assets, because that really will unlock so much more potential for the traditional financial industry to really adopt.
Can you do me a favor? What does that mean, tokenization of real-world assets?
So basically, you have a digital replica of a physical or a financial asset, and you create a token out of that, and this token can then be traded, right? For example, you have shares in a fund today, you have a share registry, you have a share certificate. Instead of just having a share certificate, you have a digital token of that. It's very simple, like a digital replica of it, right? And now what you can do is you can actually trade it, and you have new use cases with that token, right? Because you no longer need to go through a central registry to transfer the tokens. You no longer need to engage with the fund manager, but you can do it all automatically through smart contracts, through the blockchain. So I think one of the first things that you really gain from having this tokenized ecosystem is immense efficiency gains, right? Today, for example, some asset managers, they don't even know the total net asset value of their fund, because everything is in an Excel sheet, right? And then you have like thousands of rows of investors in a fund, and you're no longer able to calculate what the correct net asset value is, right? So there's always like a benchmark number, basically. Now with blockchain, tokenized assets, is all on-chain, you can actually really just calculate who the token holders are, what the token amounts are, and you can also do, for example, dividend distributions fully autonomously on the blockchain, right? So that is really a very imminent future that all of us are working for. What's probably very exciting about that is that we're really making illiquid assets much more liquid. We're creating new markets out of that so that the tokenized assets can be traded, they can be leveraged, they can be used as collateral in stable coins. And so I think this is really the most exciting sort of symbiosis or merge between the traditional financial world and the decentralized financial world. And so I really think this is where we're going for. Obviously, the real future is where all assets are then investable and tradable, including, for example, music, right? Artists, influencers, where you can also tokenize the impact that an individual has and then make that investable as well. And so part of that is really to make sure that all of finance is built on these blockchain rails so that you can seamlessly transact between all of these different ecosystems. Because the way that we see the future is that countries, companies will have their own sort of blockchain environment, their own ecosystem in which they will trade. But by using blockchain, you can really make it seamlessly to transact, and it becomes a fully interoperable financial system that is really seamless. And I think that's really the vision that we're going for with DeFi.
And I love that. I think this is one of the most exciting things. Gene, I saw you nodding along. Tell us more about what you guys are doing at Chia Network and how this could become a reality.
Yeah, so I certainly agree with the efficiency thing, and I think a lot of people, again, don't necessarily know how inefficient most of these major systems are. So in the United States, it still takes 48 hours to settle stock, and they're excited that they're going to get down to 24 hours. So if you tokenize equity, you're talking about getting it down to 5 minutes.
Right.
And final settlement, both the settlement, the infrastructure, everything done. That's compelling, but it's not as compelling as what we're, for example, doing in carbon. And let me walk you through what's so interesting about this. Finally, as of kind of Q4 of last year, about 80% of all carbon offsets that Vera, Eco-Registry, and others have issued are now registered on-chain in a EDGAR-style system. EDGAR is the kind of document infrastructure for the public companies in the United States. So now, as a buyer, you can go inspect the CAD trust and cryptographically know, okay, this is the asset ID of the carbon I'd like to buy. And you may be able to find the seller. And so now you could do things like send the seller a signed transaction that spends $700,000 of USDC for 100,000 tons of their carbon.
Right.
And email it to them, and they can inspect that and see, yes, that $700,000 exists. I have the carbon you're asking for. I can create a transaction that settles that, put it on chain, and it atomically settles. The carbon is now in the wallet for Microsoft or Meta. The USDC is in the wallet of the carbon offset provider. Yeah. They then can retire it on chain. The registries are watching on chain for those retirements, and so the CAD trust updates to show of their 50,000 or their 500,000 tons, 100,000 tons has now been completed. It's done in a way that has pseudonymous, so if you're Microsoft or Meta and you don't want everybody knowing exactly what you're doing in carbon, those retirements don't necessarily trace back. But if your auditor or the SEC wants to see, did you really retire 100,000 tons of carbon, you can prove your keys, and now you have this entire audit trail from the inception of the carbon. It only happened in one location, it only happened once that year, to all of the actual retirements. You know it was not double sold, it was not double retired. And so now the only question remaining is, was the carbon offset itself any good? And so, you know, getting those kinds of financial problems to be just that, do I trust the asset issuer? That's the thing that DeFi starts to do. And you'll notice, like, we're talking about a, you know, corporation in the global north sending real money to the global south in a trustless way. Sending a wire to Costa Rica is not a fast thing from the United States. Sending an email from the United States to Costa Rica that settles in 5 minutes later is.
I like that. Alex, I know you guys actively support DeFi use cases. I'd love for you to paint us a little bit of a picture of what you see today and in the future.
DeFi will, before you talk about tokenization, we can think about what we had before token with a paper. So in my view, token is a medium.
Right.
And with paper, which is another medium, it made things a lot easier. It was lighter to carry. If there's a trust, it can be accepted to like everywhere. In token, there's a unique value in it. It can be transferable online, and it can be machine readable. We can construct a smart contract on top of it.
Right.
Very nice, but it comes with the inherent risk as well. Unlike paper, it can be non-face-to-face. Even though the value in the token, it does not change, even though it's immutable, the identity of the person controlling the token can be anonymous. It comes with it can come with the AML-safety risk, perhaps. So there should be additional technical risk mitigation measure toward it to make it happen. So even though DeFi or tokenization can give us a lot of potential, perhaps, to utilize the potential to commercialize, to capitalize it, we need to also develop a risk mitigation measure, uniquely addressing the emerging risk associated with that.
I think it's a whole new world of risk, and no one likes to talk about this. Your Excellency, Gottfried, exciting use cases you see and maybe in the future or that you're working on right now?
Yeah, well, I was wondering, why should we do something new?
Right.
And for me, there are two main reasons. Getting things done more efficiently, or the even more interesting case, inventing new things to do and doing new things. So to be honest, I don't see the future of DeFi in the classical, let's say, payment transactions with stable coins.
Right.
I know that might be disappointing for some of you, but come on. We have money. There are central banks working on digital money as well. Right. And it's nothing new or nothing more efficient. Yeah. But on the other hand, so I fully agree with most of the others said, the tokenization of real-world assets, the idea of smart contracts, the idea of having new ways of transactions, new possibilities to trade assets which cannot be traded right now. That's the most interesting part. So I fully subscribe to the tokenization issue, but I would also like to point out smart contracts. That's really, really interesting, and I think it's only the beginning. The programmability, the possibility of defining some complex transactions, that's what I think is really what we have to do with fintech and with DeFi. Because other things can be done by central banks, and it's a little bit boring.
And
I had to hold myself of not arguing with you that CBDCs are not better, but I'll leave that there.
You're right, they are not better at the moment, but they could become better.
They could be, right, yeah. Exactly.
So, I'd like to jump in on exactly this thought, which is, we've been talking about DeFi in the simple forms. Let me give you a much more complex transaction that's almost only possible in the DeFi
conscious
situation.
of time, we need to do the wrap-up as well.
Right,
yeah.
I'll make it quick. Yeah. Let's say you wanted to buy $100,000 worth of something. They want to use Tether. You have $50,000 worth of USDC, and you have $50,000 worth of Tesla stock. Imagine being able to compose in real time in a single transaction all of the nested transactions necessary to swap your USDC and Tesla stock trustlessly and escrowlessly into Tether and use that as the settlement thing that you email over and it settles immediately. The ability to kind of go cross-market in one market is just not something we currently think about doing.
Right.
Certainly not in real time.
Yeah. No, it's actually, in many ways we have to forget the way we understand the world when thinking about blockchain, because it's just a new way to transact, a new way to do business, and DeFi in many ways is at the heart of the promise that blockchain can bring. With that, we are at a minute 30 left, but I'd like to give each and every one of you a parting thought of 10 to 20 seconds, starting with Alex. Parting thoughts.
This emerging sector is very interesting, and as we have seen in any other sector, new technology always generate new industry.
Right.
It's going to be here to stay, but in order to fully capture the potential, we need to mitigate the risk. And in order to mitigate the risk coming with this new technology, we need a new technology to mitigate the risk.
Thank you for saying risk. No one likes to say risk in crypto. Dominic, over to you.
I think one of the main lessons is we cannot apply the rules and the regulations of the existing system to this new system, right? Because then you really inhibit its potential. And I think talking about risk, all of us want to mitigate risk. Nobody wakes up in the morning and says hey, I want to enable money laundering, right? That's not why any of us do this. But at the same time, I think we can work together with the regulators to think of new ways to achieve the same results. Just a quick example is KYC, right? Of course, you can do KYC on the front end, But what you can actually do in crypto is you can also do on-chain KYC and really tokenize the KYC and attach it to an address. Right? So there's new ways in which we can achieve the same results as the existing system. So I think there's some great ways to work together there.
Wonderful. Your Excellency, Gottfried.
My main takeaway is regulation should not regulate everything to death. Regulation should not prevent innovation, but the main objective of regulation must remain that major accidents to financial markets will not occur, because that would be detrimental for DeFi and fintech if some major issues might happen.
And unfortunately, we've seen that happen one too many times. And as quick as possible, we're out of time.
Yeah, two very quick points. I mean, first of all, DeFi is there to actually solve the problem we had with FTX and others. The whole point is to not have to trust those people.
Right.
And more importantly, I think one of the important things to know, having gone through the transition of digital music, from physical music to digital music, it doesn't happen, it doesn't happen, it doesn't happen, it happens.
And then immediately.
And that is absolutely what DeFi is going to do here. We're going to go from almost no assets trading in DeFi to the compelling capabilities driving those assets on chain.
Wonderful. You've heard from unique insights from startup founders, from regulators. If we look at the world that we are operating in, think about a world in 1996. Could you have imagined the internet being as important in our world today as it is now? In many ways, blockchain and DeFi have their 1996 moment, and I want to end on the thought, it's 1996, blockchain is the internet. Thank you very much for listening. A big round of applause for the speakers.